It's a fact that many individuals choose to save their money in cash rather than in a bank account. It's just a part of life for most people. However, we must acknowledge that there are risks associated with storing an excessive amount of cash at home, and it is highly likely that they haven't given this any consideration. It is also true that having a little amount of cash on hand for any reason may have certain advantages. However, there are certain hazards associated, especially if the sum is substantial. And there is no exaggeration in saying that the more money you have at home, the bigger the danger. So before you store a large stash of cash at home or any other place, consider the drawbacks of storing this large sum of money under the mattress versus in a high-yield savings account at a bank. Hey everybody, welcome to Millionaire Mind. Today, we're going to go over why you should never keep cash. Make sure to watch till the end because you would not like to miss your chance to discover why keeping cash is not a good habit. So let's get started. Number 1. Cash can be stolen. Any valuable item, including cash or jewelry, may be stolen from your house by burglars. Theft may also be committed from inside, even though we don't want to think about it. A friend or family member or someone close to you who has been welcomed into your house might do this task. Number 2. Homeowners or renters insurance doesn't cover cash loss. If you lose or have money taken, it's gone for good. Even if cash is covered by an insurance policy, the coverage is often restricted to a few $100s at most. In the event that a little amount of cash is stolen or destroyed, renters and homeowners insurance would often cover it. The limitations will vary depending on the policies, but as I said, they could be as little as a few $100s. And then there's the central question. Exactly how do you prove to the insurance company how much cash you had at home? Think about it. Number 3. There is no FDIC protection. The Federal Deposit Insurance Corporation, or the FDIC, insures deposits up to a maximum of $250,000 per depositor, and it is also valid for banks in the event of a bank robbery. There is no comparable insurance coverage available on a national level for cash held at home. If you're saving money at home for an amount that may exceed $250,000, you can always avoid this limit by opening an account with a different bank. In theory, you could have $2.5 million spread among 10 different banks and yet be fully protected by the FDIC. However, you must understand that if you stuffed your money under your mattress, you will never have any of that protection. Number 4. Restrictions on cash movements. A considerable quantity of money saved at home and then transferred to a bank might result in an IRS audit. The IRS has the power to classify cash as unreported income, since it does not leave a paper trail. You must notify the IRS if you deposit more than $10,000 into a bank. A trend of irregular deposits of cash must be reported even if it's less than $10,000. The IRS may come knocking on your door because of this. Number 5. Many places no longer accept cash payments. It is a fact that more and more retail merchants and sellers are refusing to take cash anymore. And another thing is that using cash to purchase goods or services online is almost impossible. And that's where a lot of business is taking place as well. So the takeaway is that if you have a lot of money at home but nowhere to spend it, this may be a major problem. In addition to this, there is the greatest risk of all. Number 6. No interest is earned on cash stowed away. Long term, this is the greatest danger, as you are almost certain to lose money. Even if you establish a habit of storing several $1,000s in cash at home, the money is effectively useless. Not only does it not yield interest, but it also loses value over time. Putting money in a bank account that pays interest allows it to grow. The point is that you're missing out on interest if you keep your savings in cash at home. Moreover, interest provides you with basically free money. And although savings account interest rates are currently low, you can still make a little extra money if you shop around. Number 7. Inflation is taking a toll on you. Inflation is a fact of life, and it erodes the value of any non-interest-bearing investment. For instance, if you make a habit of keeping at least $10,000 in cash at home, the real worth of that money will decline to less than $8,000 after 10 years, assuming an entirely predictable inflation rate of just 2% each year. In comparison, several online savings accounts and certificates of deposit provide extremely high interest rates. Not only will your money's worth stay pace with inflation, but it can even exceed it. And this preserves the true worth of your money in ways that cash on hand cannot. The primary goal of everyone with a sizable sum of money should be to grow it. For instance, if you invest about $10,000 in a certificate of deposit with a paying rate around 2.5% annual percentage yield, your $10,000 investment would rise around $12,789 after 10 years. By maintaining an excessive amount of cash on hand, you're effectively denying yourself the potential to increase your money by over $3,000 over the following decade. And the best part is that you don't even need to work to have that type of money. It's the ideal passive investment, and it ensures that your money retains its purchasing power against inflation. If you'd rather not keep your money in a certificate of deposit, an online savings account will suffice. Even in an era of electronic banking and the internet, having a small amount of cash on hand makes sense. However, if your investment exceeds a few $100s, you may be exposing your money to higher dangers than you realize, in order to address prospective problems that are unlikely to be as severe as you worry. The majority of the reasons why people save enormous sums of money at home are only possibilities. In actuality, the likelihood of you encountering those scenarios is extremely remote. What you're more likely to confront at home are the hazards of cash destruction, loss, or theft. Then there's the inescapable, ever-present fact of inflation, which is certain to steal your money even if you keep it in the world's strongest safe. Maintain a little amount of cash at home, but the rest should be invested or deposited with a bank. So, what are your thoughts on this? Are you going to avoid keeping cash? Let me know in the comment section below. If you learned something new today, please like and share this video with your friends. And don't forget to subscribe and turn on notifications so you do not miss more videos of Millionaire Mind. We will see you in the next video. Take care.